The housing crisis, ever-escalating rents, the impossible dream of homeownership for an entire generation. We're told these are just the natural results of supply and demand, the unpredictable whims of the market, or maybe just a temporary blip. We're conditioned to believe that the housing bubble is an unfortunate accident, an unforeseen mix of economic factors. But what if this story is a carefully built illusion? What if the housing bubble is no accident at all, but the intended result of a system designed to benefit a select few at the expense of everyone else? But first, please leave a comment below telling us which country you're watching this video from. It helps me know just how far this message is reaching. Now, this isn't about conspiracy theories. It's about critical financial literacy. It's about peeling back the layers of mainstream economic beliefs to see the structural realities that shape our lives. The housing market, far from being some organic thing, is a meticulously engineered landscape. The rules are written and rewritten by powerful interests to ensure a continuous transfer of wealth from the many to the few. To understand this, we first have to dismantle the myth of the accidental bubble. Accidents mean there was no intent, a mistake. But when we look at the mechanisms that inflate housing prices, we find a consistent pattern of policy choices, financial innovations, and ideas that actively promote asset inflation. Think about the role of monetary policy. For decades, central banks, claiming they're stimulating economic growth, have kept interest rates historically low and engaged in massive quantitative easing programs. Proponents say this fuels investment and creates jobs, but a critical look reveals a more sinister outcome. Artificially suppressing the cost of money disproportionately inflates asset prices, including real estate. When borrowing is cheap, investors, especially large institutional ones, can acquire properties at a massive scale, driving up demand and squeezing out individual buyers. This isn't an accident. It's a predictable consequence of an economic philosophy that prioritizes financial market stability over genuine affordability and widespread prosperity. Then there's the deliberate financialization of housing. What was once primarily a shelter, a home, has been systematically transformed into a speculative investment vehicle. This transformation wasn't organic. It was enabled by deregulation and financial innovations that allowed mortgages to be packaged, sliced, and diced into complex products like mortgage-backed securities. The 2008 crisis taught us a harsh lesson about the dangers of this approach, yet the fundamental system remains. Housing is now treated as a commodity to be traded, leveraged, and profited from, rather than a fundamental human right. This shift in perception, actively promoted by financial institutions and mainstream media, is key to understanding the who benefits question. When housing becomes an investment, its main function changes from providing shelter to generating returns for investors. So, who are these investors? Beyond individual landlords, we are now seeing the unprecedented entry of massive institutional players into the residential housing market. Companies like BlackRock, Vanguard, and other private equity firms are buying up tens of thousands of single-family homes, often paying above market rate. They convert them into rentals and then securitize these rental streams. They have the capital, the financial sophistication, and the sheer scale to outcompete individual buyers. Their motive is clear, stable, long-term returns through rising rents and property value appreciation. This isn't just market competition. It's the industrialization of housing, where homes are stripped of their social value and reduced to lines on a balance sheet. When these giants enter a market, they fundamentally change its dynamics, pushing prices beyond the reach of local residents and converting communities into revenue streams. This is not an accident of the market. It is a calculated strategy executed by powerful entities. Furthermore, government policies, often influenced by powerful real estate lobbies, play a critical role. Zoning laws, for instance, are often blamed for housing scarcity. While some zoning is necessary, restrictive single-family zoning in high-demand areas artificially limits supply, leading to higher prices. These policies are often defended as preserving neighborhood character, but they effectively act as barriers to entry for lower and middle-income payouply, benefiting existing property owners whose assets appreciate in value Tax policies also heavily favor property owners and investors. Mortgage interest deductions, capital gains, exclusions on home sales, and favorable depreciation schedules for rental properties all provide significant financial incentives for holding and speculating on real estate. These are not neutral policies. They are deliberate choices with predictable outcomes, making housing more expensive and concentrating wealth. The who benefits question becomes startlingly clear when we connect these dots. First, the financial sector benefits immensely. Banks profit from originating mortgages, from the fees for securitizing them, and from the interest earned on loans. Investment banks profit from creating and trading complex financial instruments tied to housing. Hedge funds and private equity firms profit from acquiring vast portfolios of properties, driving up rents, and then selling for a profit. The financialization of housing provides a continuous stream of revenue and speculative opportunities for this sector, effectively turning the basic human need for shelter into a profit extraction machine. Second, existing property owners, particularly those with multiple properties or high-value assets, benefit as prices rise. Their net worth increases, often without any productive effort on their part. This creates a deeply unequal system where those who already own assets are rewarded, while those who don't are pushed further behind. The housing bubble worsens wealth inequality, widening the gap between the asset-rich and the asset. For many, their home becomes their largest asset, a retirement plan, or a source of capital. This creates a powerful political group that resists any policies that might deflate the bubble, even if those policies would improve overall affordability. Third, developers and construction companies benefit from high prices and demand. While they are essential for creating housing, the current system often incentivizes building luxury units with high profit margins rather than affordable housing that meets the actual needs of the population. The land itself, particularly in desirable urban centers, becomes incredibly valuable, and those who own or control it reap massive rewards. And finally, politicians and policymakers, often beholden to campaign donations from the real estate and financial industries, benefit from maintaining the status quo. They can claim economic growth based on rising property values, even if that growth is exclusionary and unsustainable. The political will to implement truly transformative solutions that might challenge these powerful interests is often absent, replaced by small reforms that do little to address the systemic issues. The consequences for the majority are dire. We see an entire generation struggling with unprecedented levels of student debt, only to find the next major life milestone, homeownership, completely out of reach. The burden of rent consumes an ever larger portion of income, leaving less for savings, education, healthcare, or starting a family. Housing precarity becomes a defining feature of modern life, leading to increased stress, instability, and a diminished quality of life. The housing market, in its current form, is not just failing to provide shelter, it is actively extracting wealth and opportunity from the working and middle classes. So, if the housing bubble is not an accident, and we can see who benefits, what should we do? We must reject the prevailing wisdom that housing is simply a market commodity. We must reframe housing as a fundamental human right and a social good. This shift in perspective is crucial because it opens the door to fundamentally different solutions. Instead of tinkering at the edges with subsidies that ultimately just get absorbed into higher prices, we need systemic change. This includes robust investments in public and social housing, removing a significant portion of the housing stock from speculative markets. It means exploring and implementing mechanisms like community land trusts, where the land is owned collectively and housing remains permanently affordable. It means considering policies like a progressive land value tax, which would discourage speculative land hoarding and encourage productive use. It means rent controls that are genuinely effective and widespread, not just symbolic gestures. It means re-regulating the financial industry to prevent the kind of speculative excess that led to the 2008 crash and continues to fuel asset bubbles today. Furthermore, we must critically examine the role of monetary policy and demand that central banks prioritize genuine economic stability and broad-based prosperity, not just asset price inflation. This means questioning the very foundations of our current economic paradigm and advocating for a system where finance serves the real economy and human needs, not the other way around. The narrative that housing bubbles are natural, unavoidable, or accidental serves a very specific purpose. It absolves the powerful actors who engineer them of responsibility. It deflects attention from the systemic flaws and the deliberate policy choices that create this crisis. Understanding that the housing bubble is no accident is the first step towards reclaiming our collective power, challenging the beneficiaries of this rigged system, and demanding a future where housing is a secure home for everyone, not just another asset class for the privileged few. The system is working as intended for those it was designed to serve. It's time we demand a system designed to serve us all. If you found this critical analysis valuable and believe in challenging conventional narratives about our financial system, please consider subscribing to this channel. Your engagement helps us continue to expose the truths behind the headlines and build a more informed, empowered community. Thank you for watching.